Welcome, folks, to Crypto News Global. I'm your host, Nick Toka, and Bitcoin and the whole market and even the stock market is pumping today. Everything in the green. And on today's show, Bitcoin and the stock market rally hard as the White House narrows scope of the tariffs. Also, Michael Saylor kicks it into gear again, and he stays bullish as Strategy buys 584 million in Bitcoin, pushing their holdings to 2% of the total supply. Also, save in Bitcoin, spend in dollars. This is great advice. Is this the way before Hyperbitcoinization? Perhaps it is. And Arthur Hayes flips bullish on Bitcoin and predicts 110,000 rally amid Fed's policy shift. All this and so much more on today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. As we mentioned, Bitcoin is pumping nice. Today is March 24th, 2025, and I'm your host, Nick Toka. Welcome to Crypto News Global. Bitcoin currently sitting at $87,000. Currently showing up 0.5%, but it was really up about 3-4% for the day, as was everything. Ethereum was up 3-4%. Solana was up 7-8%. Currently, Ethereum up 2.25%, 2,061. Solana up 2%, just right under $140. Doge up 6% at 18 cents. XRP showing down 1%, but it was up a couple percent today as well, currently sitting at $2.42. Going into the crypto bubbles, 95% in the green today. Form leading the way, up 28%. CRO also up 28%. Zooming out to the weekly, that's more like it. We've got 95% for the week, up as well. Hype up 25%, Crow up 28%, Bonk up 28%. And zooming out for the monthly, we have, I would say, 90 to 95% in the red. But again, as the prices come up, we're going to see more of these flipping to the green for the month as the timeline continues. Checking out the current market cap, we have Bitcoin sitting at $1.722 trillion, Ethereum $248 billion, XRP $141 billion, Solana $71 billion, Doge $27 billion, Cardano $25 billion, and Tron $21.5 billion to wrap up the top 10. The total crypto market cap is $2.8 trillion. And Bitcoin holding 61.5% of that, Ethereum 8.8%, and XRP 5% of the total crypto market cap. Right now we're sitting at a 46 in neutral in the Crypto Fear and Greed Index. Yesterday it was a 45 in neutral, and last week was a 34 in fear. There's currently approximately 1,115 days until the next Bitcoin halving in 2028, with 160,701 blocks left to mine until that time, and until the year 2140, where the very last Bitcoin will be mined. There's 1,158,441 remaining to mine. The total assets by market cap globally, we've got gold at 20 trillion, 20.2 trillion, Apple at 3.3 trillion, Nvidia 2.9 trillion, Microsoft 2.9 trillion, Amazon 2.1 trillion, Google 2 trillion, silver 1.8 trillion, And there's the bidding at 1.723 trillion, ahead of Saudi Aramco at 1.6 and Facebook at $1.5 trillion. You can currently get 1,051 Satoshis for one US fiat dollar. And speaking of fiat, we have the current US national debt at 36,639 billion. Well, folks, there were a whole lot of naysayers, and really all it took was some respectable news out of the States in terms of the insane up and down tariffs. So now that we have a little more clarity, Bitcoin and stock market rally hard as the White House narrows the scope of the tariffs. Digital assets and equities are soaring on the weekly open today amid renewed optimism stemming from White House taking a softer tone on tariffs. While tariffs threatened initially sparked one of the worst stock market downturns in recent memory, reports are now suggesting that President Trump's aggressive trade negotiations may be in the process of a smooth resolution. Citing U.S. officials familiar with the matter, Bloomberg reports that Trump's reciprocal tariffs may be more targeted than initially anticipated, with some countries being exempt and some sector-specific levies being delayed by the White House. The Wall Street Journal reported similar information. All major stock indices opened the week well into the green, while Bitcoin was up 3% on the day and is now up 15% in 2025. From its current lows of 76,500. I don't want to say I told you so, but I told you so. I knew we were hitting the dip there, and that was definitely time to buy. It's still not too late, but I had a show specifically called Buy the Dip, or I think it was called Buy the Fucking Dip, with big letters written right on there, Buy the Frickin' Dip. So, I certainly bought the dip. So, that means I'm up 15% from the bottom. Maybe 14. I didn't quite get it at 76.5. I think maybe 78. Said Tobin Marcus of Wolf Research in a note seen by CNBC, omitting the sectoral tariffs from the April 2nd package significantly reduces both its aggregate scale and the maximum rate on targeted sectors, given that all of Trump's tariffs to date have been designed to stack. The ceiling for reciprocal tariffs on April 2nd remains dramatic, and we still expect a negative market reaction, but the scale won't be as severe and the sectoral impacts won't be as concentrated. However, in a post on Truth Social, President Trump announced that secondary tariffs would be placed on Venezuela and any country that purchases oil and gas from that country. Trump cited numerous reasons, including the fact that Venezuela has purposely and deceitfully sent to the United States undercover tens of thousands of high-level and other criminals, many of whom are murderers and people of a very violent nature. Yeah, so Bitcoin was up to 88,000 at one point today, while our heads returned to currently sitting at 87, just under 87. Another big bullish tenant for the day is Michael Saylor. Our buddy Mike stays bullish as Strategy buys $584 million in Bitcoin, pushing its holding to 2% of the total supply of Bitcoin. Microsoft, formerly MicroStrategy, is announcing the acquisition of nearly 7,000 more Bitcoin, worth approximately $584 million. In a new post on the social media platform X, Strategy is now owning over 500,000 Bitcoins, boys and girls. Strategy has acquired a 69.11 BTC for $584 million at the price of $84,529 per Bitcoin, as he now has achieved a BTC yield of 7.7% year to date. As of March 23rd, we hodl 506,137 Bitcoin acquired for $33.7 billion at the average price of $66,500 per Bitcoin. So they're up 20,000 per Bitcoin, and they have 500,000 Bitcoins. So what is that? A cool $10 billion? According to data from Bitcoin treasuries, Strategy now owns over 2% of the global circulating Bitcoin supply. Man, don't we all wish we could say something like that, eh? But he definitely doesn't talk like a tycoon. He's a regular guy. I really like him. Other top holders include U.S. firms Mara Holdings, Riot Platform, Tesla, and Coinbase, all adding up to less than 1% of the Bitcoin supply. So, Strategy B, MicroStrategy, owns 2% of the total supply, and all these others, Mara, Riot, Tesla, and Coinbase combined together, they own less than 1% of the Bitcoin supply. 2 weeks ago, Strategy's executive chairman Michael Saylor doubled down on Bitcoin during the market crash, announcing a $21 billion stock sale to buy more of the flagship crypto asset. According to the announcement, the funds will be allocated for general corporate purposes, including acquiring additional Bitcoin. Strategy says the stock sale, part of Strategy's 21-21 plan, aims to raise capital through an issuance of 8% Series A perpetual strike preferred stock. The issuance of perpetual preferred stock aims to allow Strategy to raise significant capital without committing to a repayment timeline, as these shares don't have a maturity date. While speaking at the Conservative Political Action Conference, CPAC, during the same week, Saylor said that BTC was digital property and an important tool for the U.S. to own cyberspace in the future. Yeah, and he's told the U.S. government they should be buying 20% of the total supply. So interesting. And I also read an article about the U.S. selling their gold reserve or some of their gold reserves and buying Bitcoin with it, which of course would be a budget neutral way of acquiring more Bitcoin, which is what they said in the crypto summit. And it's also what they said when they announced the Bitcoin U.S. Treasury Reserve. So it'd be interesting if it goes that route. If it does, what we're going to see is gold is going to come backwards from its 20 trillion market cap, and Bitcoin is going to start pumping up toward that market cap, and they might just merge right in the middle, right? Who knows? At $10 billion bucks. A good strategy, of course, is save in Bitcoin and spend in dollars. Is this the way before hyperbitcoinization? And this is the question. An overview of Lava's latest BTC stablecoin offering and the recent intense debate about spending BTC. Lava has developed a self-custodial Bitcoin borrowing platform. Unlike traditional crypto loan services that take custody of users' assets and sometimes engage in risky practices like rehypothecation, Lava is self-custodial and leverages native Bitcoin smart contracts, DLCs, to enable a more secure borrowing experience. The platform's primary product is the Lava Vault, available on mobile and desktop, which serves as a secure self-custodial wallet and borrowing interface. It uses advanced security features such as device-based secure chips for private key management and biometric two-factor authentication to ensure users' funds remain safe. Lava also offers encrypted backups to mitigate the risk of fund loss from a single point of failure. Yes, that's quite smart from what we've seen historically. People are losing this shit and losing their frickin' shirts when they're losing their keys. It's insane. Lava's loans products also enable users to borrow dollars against their Bitcoin holdings, providing liquidity without requiring them to sell their Bitcoin. Fucking right. This is brilliant, right? We've been talking about these banks before where they will take your Bitcoin in exchange for cash, but they're basically holding your Bitcoin for you. Now, do I trust this, and will you get your Bitcoin back? Clearly you're in some kind of contract with this company and you would assume that you're going to get it back. But this is quite interesting. This is particularly appealing to Bitcoin hodlers who want to maintain long-term exposure to Bitcoin potential appreciation while accessing cash for immediate needs. Lava's unique discrete log contract technology enables it to provide these loans on a self-custody basis, reducing counterparty and hypothecation risk. Look, I can see a couple uses for this already, right? You're a student. You got some Bitcoin a while ago. You're hodling on this Bitcoin. You've got to go to school. You need to pay. You don't want to get a student loan. You go to this Lava place. You put your biddy with them. You get your money for school. While you're in school, 3-4 years go by. The Bitcoin goes way up in price. By the time school's over, in an ideal situation, another full Bitcoin cycle has passed. And by then, the price, the way it's looking, the price has, been going 10x, 20x from the previous cycles. You take your Bitcoin back, you pay off your student loan from this Lava place, which of course they wouldn't call a student loan, and I don't know what their interest is on these things, but you get the idea here. And additionally, you want to buy a property, same kind of thing, right? They will take your Bitcoin and give you money against your Bitcoin. So I'm not sure what the actual clauses of this contract are, but it seems, at least from this article, pretty legit. Lava has launched its own stablecoin offering, Lava USD, to combine Bitcoin with dollar-based spending. Lava USD is redeemable 1-for-1 for the US dollar via reserves invested in cash and highly liquid instruments. The reserve portfolio contains a mix of short-dated U.S. Treasuries, overnight U.S. Treasury repurchase agreements, and money market funds, all custodied with partners such as BlackRock and Fidelity. The Lava USD enables users to make payments anywhere in the world frictionlessly. Here's why they launched it. Instant and global. Lava USD extends the stability of the US dollar to a global user while maintaining the trustlessness and security of modern cryptography. All transactions are instantaneous and settled 24/7, 365 with support for instant and off-ramp fiat currencies around the world. Lower cost, rewards, security, cross-chain swaps. The case for spending BTC versus spending dollars. Last week, the tweet by Caitlin Long and amplified by our favorite Bitcoiner in Congress, Cynthia Lummis, received significant pushback from some Bitcoiners, offended at the idea of her perpetuating the fiat system instead of transaction directly with Bitcoin, as it was intended by Satoshi. Spending BTC directly with merchants or individuals is often hailed as a step toward hyperbitcoinization, the hypothetical scenario where Bitcoin becomes the dominant global currency. This approach strengthens Bitcoin network effect, encourages adoption, and aligns with its peer-to-peer philosophy, bypassing intermediaries like banks. However, the strategy faces significant hurdles. Firstly, BTC's price appreciation potential remains substantial. Historical data shows BTC's value has surged from negligible levels in 2009 to over $100,000 by 2025, driven by finite supply capped at 21 million, coins and growing institutional interest, i.e., MicroStrategy's treasury strategy. Spending BTC now risks foregoing future gains, especially as halvings and market dynamics continue to constrain supply against rising demand. Secondly, tax conditions in many jurisdictions, including the United States, impose restrictive burdens on spending BTC. In the U.S., the IRS treats BTC as property, meaning each transaction triggers a taxable event. Selling or spending Bitcoin at a profit incurs capital gains tax up to 37% for short-term gains or 20% for long-term holders, based on the difference between purchase price and sale price. The complexity discourages direct spending as users must track cost bases, report gains, and navigate administrative overhead, often outweighing the convenience of Bitcoin payments. For instance, a $1,000 Bitcoin purchase spent at $10,000 would trigger a $2,800 tax liability, assuming a 28% effective rate, making dollar-based spending via stablecoins a more tax-efficient alternative. Why holding Bitcoin now outweighs spending it now? Given Bitcoin's upward trajectory, spending it now may undermine long-term wealth preservation. Analysts suggest Bitcoin could reach 200,000 or more by 2030. 200,000. I'm thinking 200,000 by June. If current trends persist, driven by inflation, hedging, and weakening fiat system, spending BTC at current prices locks in value at a fraction of its potential, especially when alternatives like Lava's lending model provide liquidity without forfeiture. Moreover, the tax burden amplifies this disincentive as frequent transactions erode net returns. This aligns with the HODL philosophy, where retaining Bitcoin maximizes appreciation while using borrowed dollars or stablecoins meet immediate needs. Mitigation strategy, buyback mechanism. To balance the desire to spend with BTC retention, a buyback strategy offers a pragmatic solution. After borrowing dollars against BTC via Lava's platform, users can spend these funds while committing to repurchase Bitcoin at a later date when market conditions or personal finances allow. This approach leverages Lava's self-custodial lending with its 5% interest cost to access liquidity without selling, preserving the original Bitcoin stash. The buyback can be timed to capitalize on market dips or post-tax season liquidity, potentially at lower prices, enhancing overall holdings. For example, borrowing $10,000 against 0.1 Bitcoin valued at $100,000 allows spending with a buyback of 0.09 Bitcoin at 90,000 later, netting a gain of BTC appreciates further. Strategy mitigates tax exposure by deferring sales and aligns with long-term appreciation goals. All right, so we're seeing more and more banks come up with some respectable ways to hold your biddy and give you cash or give you a loan against your biddy. I liked this one. Seems okay. There was another take on this a few months ago with a different financial institution where it was basically a loan for big purchases, cars, houses. So, you know, this Lava thing seems similar. I do like this buyback program. So you give them 0.1 in their scenario. So then you're taking 10,000 and then you're basically taking back 0.09. So if the price goes up, you basically aren't paying back shit, right? you're not paying back anything. So it's kind of interesting. They will hodl for you, but if you really think about it, what are they trying to do? They're trying to get everybody's Bitcoin. Anyhow, hodling, self-custody, there's nothing better than that. If you don't need the money, just hodl, folks. Hayes flips bullish on Bitcoin and predicts a 110,000 rally amid Fed's policy shift. Hayes clarifies that he views Bitcoin as more likely to rally to 110,000 than to decline to 76.5 in the short term. Yeah, no kidding. BitMEX co-founder Arthur Hayes said Bitcoin, here he is here, is more likely to climb to 100,000 before experiencing a significant correction, pivoting from his previous stance that further downside was likely until Bitcoin hit 70K. Hayes said in a social media post on March 24th that his views have flipped bullish due to the potential shift in U.S. monetary policy. Monetary policy. Hayes noted that the Federal Reserve anticipated move for quantitative tightening to quantitative easing could create the liquidity conditions needed for Bitcoin to break through its previous all-time highs. Now, my question is, these folks, this is what they do for a living. I mean, co-founder, BitMEX. Couldn't they have anticipated this move by the feds? Just saying. Instead of, freaking everybody out saying, oh, the price is going to hit 70, the price is going to hit 60. It's just interesting. But I guess for every bullish folks, there's going to be some bearish folks. But now he's turned his view around. I mean, I guess it's responsible too. He's seeing the actual news, waiting for the actual news instead of, predictions, right? Hayes downplayed concerns about inflation and rising tariffs, arguing that inflation remains largely transitory and that monetary policy, not trade tensions, will shape Bitcoin's trajectory. I agree with that. And now we see all these trade scares, I guess, dissipate a little bit, and things are more focused on, sadly, the Fed's, Jerome Powell's every word. The Fed is pivoting from QT to QE. We covered this about a week ago for treasuries. He suggested the U.S. central bank's next action could resemble those taken during prior market interventions. Hayes added that if Bitcoin reclaims its high at 110,000, then further upside to 250 would be in play. Yes. Hayes clarified that he views Bitcoin as more likely to rally to 110 than experience another decline to 70,000 levels in the short term. However, he still sees the potential for a pullback to that lower level once the rally peaks, warning that markets could become overextended in the event of exuberant liquidity-driven growth. According to the Crypto Slate data, Bitcoin is trading at around 88,000 at the time of the press, up more than 4% over the 24 hours. Hayes' outlook aligns with other bullish market calls, including 10x Research, which recently said Bitcoin may have already bottomed. The firm initially expected a deeper correction after Bitcoin broke below 95,000. However, a series of macroeconomic and geopolitical developments have since prompted a reassessment. 10x analysts noted early signs of bottom formation, bolstering by a shift in President Donald Trump's rhetoric around trade policy. Trump signaled a more flexible stance on April 2nd reciprocal tariffs, easing concerns over potential trade tensions and their impact on markets. This softening of tone was interpreted as a positive risk signal, hence the pump today. And I've already looked, and the Nikkei, last I checked, so already tomorrow, the Nikkei is up 0.75%. So it's a good way, if you guys don't do this, if you want a good look at what's happening tomorrow, right, there you have it. That's what's happening tomorrow. Let's see if we can get that in the camera. Bullishness is what's happening tomorrow. There's the Nikkei. So the Japanese stock market. So it's easy enough to check what likely is going to happen in our stock market. And, the Bitcoin's been following the stocks and the market quite a bit in recent months. So we can get a reasonable indication that tomorrow the stock market is likely going to also be up 0.75% here. And of course the day's not over in Japan, but it's a good way to kind of predict the market, folks, if you haven't been doing that. It's an old trick on the standard traditional financial systems where basically you look at the Nikkei because it opens middle of the night here, evening here. It's already in the morning over there, so you check it out. Okay, is the market going to pump over there? And if the market's pumping, then you kind of get ready to sell. If the market's dipping, then it's your time to shine by buying the dip. So this also could and does extend over to the crypto sphere as well. So I'm seeing the Nikkei up, almost 1%. I would expect that the stock markets over here are going to be up about 1%, and I expect that the biddy, generally, if the stocks are up 1%, the biddy's up 2%, and Solana's up 4%, and vice versa. That's kind of the way I look at it. And the shittier the coin, the bigger the gain, right? If Solana's up 4%, Doge is probably up 8%, and then going the other way, if Bitcoin's down 1%, Solana's probably, if the stock market's down 1%, Bitcoin's probably down 2%, Solana's probably down 4%, and Doge probably 8%, and down the list. And and the shittier the coin, of course, the more this kind of accelerates. I'm not saying Doge is shit. I'm just saying, it doesn't really have much utility. So if you get into the memes, then there's even less utility. So like a Pepe, if Doge is down 8, Pepe is going to be down 16 kind of thing, right? That's just my opinion. As everything we talk about here, I'm sure we go through the news, but I also have some opinionated things to say, and take it with a grain of salt. Always do your own research, folks, because there are lots of people out there with their own opinions, and there's tons of money out there. There's $900 trillion in assets in the world, so try and get your piece of it. Money is abundant. Money is everywhere. It's time that's scarce, so use your time wisely. Do some learning. If you start making more money suddenly, don't start spending more money, start saving more money, and always spend less than what you earn, and that way you're always staying in the green above, and you're never paying interest for credit cards, loans. You're not paying the bank. We want to stop paying the bank, folks. That's the number one goal. If you owe, that's what you should be trying to do, is pay off the stupid bank. And then once you do get that paid off, then the money you're paying, if you're paying, $200, $300 at the bank, once you're done paying that off, then you can take that $200 or $300 and put it toward investments. Instead of saying, oh, great, now I have an extra $300 to buy whatever shoes every month. No, start investing in, right? Start saving when you're young. If you start saving in your teens and investing in your teens or early 20s, you should be able to retire when you're 40 or 45. If you have something that you call a great idea, start your great idea today, even if you're not ready, and things will slowly come together, and your great idea will come to fruition. And even if it doesn't work out for you, you'll at least have the satisfaction that you tried. And it's always better to even try and fail than live in regret of never trying at all, right? Here at Crypto News Global, you're not only watching Crypto News Global, you are Crypto News Global, folks. I am on a path to have 500 to 1,000 subscribers, and it would be great if you could join me on this journey. If you found this stream enjoyable, please share, like, comment, and subscribe, and we will see you in the next stream. Folks, thanks so much for joining.